Hi everyone, let's go over my medium time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, starting with my medium time frame bullish scenario where we are looking for a finished wave 1 or a finished wave 2 or B, and now we're looking for continuation to the upside either in a wave C or a wave 3. Now wave 3 tends to be the most impulsive and strongest wave in an impulsive structure, so you really want to see price pick up with high volume and a parabolic move towards the upside, while a wave C tends to be more of a lazy structure to the upside, also tends to be longer than this wave A, and that is why you see the vertical line on the chart, which is a fib time taken from the low to the high of A and then put it on the low of this wave B to compare the time it took to develop wave A with the time it takes to develop wave C. And usually wave C tends to take a little bit longer than the 1-to-1, which is now positioned on the 9th of August, so a couple of days. The common target for wave C is between the 1 and the 1.236, taken from the same pivots over here, with the target being between 35.1k and 36.8k. For a wave 3, as it is usually the strongest and most impulsive wave, you like to see the 1.618 being hit as a minimum, which is sitting at 39.3k. The main issue with this scenario, however, is the corrective structure that we have, because if we are looking at this corrective structure, we could be looking at an A, B, C, which is a 3, 3, and then a 5-wave move to the downside. However, if we are looking for a 5-wave move to the downside, we have to look at a diagonal, because there's overlap between the low of 1 and the high of 4, and then a wave 1, 2, 3, 4, 5. The main issue is that in an ending diagonal, all the waves have to be zigzag structures, being a 5, 3, 5. And as you can see, this looks very immediate, very direct to the downside. This one as well, and that one as well. So we can't really count any like zigzag structures over here. If we then look at another ABC, where this is still an ABC, however, we are now looking for an impulse 1, 2, 3, 4, 5, we have overlap, which is what you want to see in a diagonal, but you don't want to see this in an impulsive structure. And if we look at a WX and then a wave Y to the downside, which then is a 3-wave structure, then we can count an ABC over here, a nice 3-wave structure, which is valid, wave C hitting the 0.618, which is pulled from the high to the low to the high over here, to the low of wave A and the high of wave B. So that is very nice, but then you want to see the beginning of the impulse starting from this low. However, we now took the low, which is not allowed in a potential 1, 2, and then a 3 continuation. So even though I have a bullish scenario on my chart over here, where we then count from this low a 1 to the upside, it is incredibly difficult to have this low over here as the low of a corrective structure, because it doesn't match with any of the Elliott Wave rules. If we then zoom in to this structure and we go to the micro over here, then what we want to see is the impulsive structure to the upside, as shown over here, a 5-wave move and then a wave 1. And then we would be looking for a wave 2 to the downside. Now it started okay with an ABC zigzag to the downside. It's the most common pattern in a wave 2, ending around the golden pocket 786 area, which is a common target area for a wave 2 as well. And also this wave C hit the 1-to-1 trend-based fib extension taken from the high to the low of A to the high of B. So that all worked very nicely. Also time-wise, this was nice between the 0.618 and the 1-to-1 fib time taken from the low to the high of 1. However, we then want to see continuation to the upside in a wave 3. We want to see an impulse to the upside. Instead, price has been ranging sideways and did not find the strength to move towards the upside. Then we could think, well, could this wave 2 be longer, right? And then instead of this being a single structure, we are now looking at potentially a WXY, where this is a wave W, 3-wave structure, this is a wave X, and now potentially then some sort of a triangle. But a triangle doesn't work, because if this is a triangle, we have an A, B, C, C going below A, that is not allowed, invalidates a triangle right there. So that doesn't really work. And also, if we are looking still for a wave 2 in this scenario, we are approaching the 6 fib time taken from the low to the high of wave 1. And as mentioned, this one over here, this low was very nice. But now price is almost over here. This range is almost 6 times longer than the impulsive structure, which is extremely rare for a wave 2. So not really supporting a great bullish scenario towards the upside. If we then zoom out and go to the more bearish scenario, then in this scenario we are looking at the high of the impulsive structure being here, and we're looking for a WXY to the downside. So now we have this zigzag over here in an ABC, very nice. Wave X is then a three-wave structure expanding flat in wave X, and you can see that wave X is positioned between the two vertical lines on the chart. These are fib times taken from the high to the low of W, and then you double click over here, toggle on the 618 and the 1-to-1, and you'll see that this high is right in the middle. And that is nice for a wave X as well, that it is in between at least the 0.618 and the 1-to-1. Wave X could still take a little longer and move to the right, but as it stands, having the wave X here works very nice for then a wave Y to the downside. Now in this scenario, a wave Y can have three structures. It can be a zigzag, it can be a flat, or it can be a triangle. And if we look at a zigzag, you want to see from the high impulsive structures to the downside. But as you've just seen with the micro scenario on the bullish micro scenario, this structure to the downside over here looks like a three-wave structure, not a five-wave structure. So the zigzag is becoming a bit of a problem. Then we have a triangle, which is also an option in a wave Y. So you want to see a triangle over here, but a triangle has to be zigzags. So this cannot be a big triangle like this anymore, because the first structure by itself is already a zigzag. So if this is then already a zigzag, we could be looking for then an A, B, C, D, E, something like this, but that's a very small triangle compared to much bigger waves over here. And also this sideways range doesn't look like a zigzag. There is potentially the discussion where you can have a double zigzag in a wave A, but you know, it's very early to call any sort of a triangle over here. So at the moment for me, the flat is the highest probability option, where this is then a move to the downside in three waves, currently ranging in a wave X. Seeing another move to the downside would be ideal, and then a three-wave structure to the downside, moving to the upside to then take the triple top and then move towards the downside. If we look at the targets for a potential wave B, because it is a three-wave structure that we are looking at for an expanding flat, it's then a wave A, B, and then a wave C. We can already check the targets of a wave B. If we put the Fibonacci over here on the high of X to the low that we have on the chart at the moment, then you do see that the most common target for a wave B, being between the 1.236 and the 1.38, is right on top of the triple top. So that is very, very nice indeed. And if price would move towards the downside just a little bit lower, then you can see that still the most common target for wave B is right around that triple top. And that is why it's so interesting for maybe price to move down, take the lows that we have over here, then move to the upside to take the highs for then a potential short position, where what is interesting could be a swing failure pattern type of move, taking the highs, closing below, entry, move to the downside. No financial advice, but that could be an interesting plan. If we then zoom in to what is happening locally, just as I did with the bullish scenario, then over here I got a channel just to express a little bit better how sideways this range actually is and how not impulsive this move to the upside is from the low that we had over here. So we have this three-wave structure to the downside, but then where is the impulse, right? If this is a wave 3 to the upside, you want to see a big structure, you want to see volume coming, you want to see the parabolic move. It's not there, it's just a sideways range, which means that the probabilities at the moment are higher for this being some sort of a WX, maybe already in, maybe we have another high to come. That's absolutely fine, for then a Y to the downside. And if we look at potential confluences above the range where we are now, we do have some resistance over here, 29.475, as well as a daily at 29.7k. So if this wave X is not yet in and we would move to the upside once more, then these are areas that I do keep my eye on for then potentially a move to the downside. Of course, we have to observe the reaction. At least on this channel, we don't FOMO, we don't catch knives, we are not YOLOing. We observe the reaction at these levels. If price is pushing up with a high amount of volume and very impulsive, then obviously there's no short setup or scenario over here, at least no financial advice, but that's my way of trading. I am a reactive trader. I don't catch knives. I've lost enough money in the past doing so. And then we are looking for a wave Y to the downside. So either X is in and we already started, or we get another move up, and then I'd be looking for that wave Y depending on the reaction that we get up here. Now we have some divergences over here. We have a bearish CVD divergences as price was moving to the upside. These have not yet played out, as the target for the bearish CVD divergences is this low over here. We also have the bullish CVD divergences, where we have over here higher low on price, lower low on the CVD, but this one came down on a lot of volume, so that lowers the probabilities for these CVD divergences to play out. It can still play out with the target being this high over here, but in the end it is a probabilities game. So if you feel confident with all the other confluences, of course no one is holding you back. Then we also have some more bullish CVD divergences over here, higher low on price, lower low on the CVD. Now this drop to the downside was the second CVD divergence we had with this pivot over here. The first one was these with this higher low over here, so that lowers the probabilities slightly, and we also have some bearish CVD, so it's a bit mixed in this range over here. If we then finally go to the probabilities, then on the medium time frame, I explained the bullish scenario and the problem that it has at the moment, and therefore the medium time frame preferred, or at least the probabilities from an Elliott Wave point of view, are towards the downside. It's the bearish scenario, of course. That doesn't mean we can't go up, because in the scenario I explained, actually moving to the upside once more to look for the highs over here is very, very nice. So I would look actually for a move to the upside over here, for then a move to the downside. But in the end, it is a bearish scenario, as we are expecting lower prices. And the same is true for the low time frame, as well as more locally over here on the micro, because at the moment this range over here looks very, very corrective. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.